Hello, hello. Good day, traders. Good day. I missed you guys so very much. I missed you guys. It's been a while I dropped a video. It kind of is because I'm kind of busy doing a lot of things. Today I said I just had to do a video to guide you, my traders and all of you who have been following me up, to guide you on what to do in the market, because a lot of people are getting confused. I don't know. My trade is not tanking. Why is market behaving like this? They will start jumping from one strategy to other, thinking that their strategy is the problem. Guys, I want to tell you that your strategy is not the problem, because the market goes in phases. So guys, if you understand that the market has phases, the market goes in phases, you will be in a better position to know what the market is doing at a particular period. So guys, it's not about your strategy. If your strategy has been tested before and it worked, possibility that the strategy is still good, but the market is doing what it wants to do. That's what it is, guys. So today I'll be jumping over to the chart, and so that we can see what we should be expecting and what we should be trading right now. Okay. Okay, let me share my screen right now. But before I share my screen, I just want you to use 3 seconds to like, share, and comment on this video. If you have been liking my post, I've been giving you ad back to back, and you've been seeing from the results that that what we are saying here is what the market actually does. We are not hyped, guys. We are telling you how it is, what the market is doing, and we're not just telling you that we are not just showing you only the good side of our trades. We'll also be showing you, giving you update on how the trade we took worked. So if you like our channel, if you like what we are doing, please keep on sharing. Subscribe to this channel, subscribe and keep sharing. And I appreciate those people who have been sharing this channel. It shows that when I see the subscription goes up, it tells me that there are people out there who actually appreciate what you are doing. So keep doing what you are doing. There are people out there who actually need this knowledge. A lot of guys are struggling in forex, and it's not really good. So today I will be sharing my story, guys. Yes, we are back. We are back. The network just did what it usually does in Nigeria. We have a very bad network in Nigeria. That's just the truth. Soon I will be dropping a video on the reason why most Nigerians don't make it in forex trading. Okay, watch out for that video. So guys, you are welcome inside of my screen. You are welcome inside. Let me just put this guy out so that I'll have a better view. Now, guys, you know me that I trade gold. In fact, will I brag? Let me just brag a little. I'm master of gold. Don't mind me though. But guys, gold is gold. We keep trading gold. Thank you for gold, because I don't know what we will be trading right now because of what is actually going on in the market. So guys, the chart you're seeing right now is gold. Okay, should we start from gold? Should we start from gold? Okay, let's start from Euro USD, because I'll be taking it right now, guys. Now, I told you Euro USD. I told you guys that Euro USD is a sell. It is a sell, no matter what was going on. The reason why I told you guys that the Euro USD was sell, because the market gives us a structure. For the past months, the market has been ranging. Guys, look at the range. Look at the range. From within this period, the market has been go here, go up, go here, go up, go here, up and down. And when the market is ranging, it is best that you avoid the trading at that particular time. Because if you take trades, you'll be here. Your trade might be in profit now. In 2 hours, 3 hours, your trade will be on loss, profit, loss, just like that. So to cut yourself the heartache, avoid trading a pair that is ranging. Now, Euro USD. I told you guys that Euro USD is a sell. Now, the reason why we say it's a sell is because on the weekly time frame, guys, first of all, our general trend is bearish. So because our general trend is bearish, You know how I've taught you the top-down analysis. You know how we do analyze it. So this trend is down, it's pointing downward. So the trend is pointing downward, impulsive retracement, impulsive retracement, impulsive. So the market is downward. It's below the moving the trend line. Now, when you come to a weekly time frame, I told you that whenever you see a structure forming on a weekly time frame, guys, it shouldn't be neglected. If you have not been getting anything from my channel, get this right into your score. If you see a structure in weekly time frame, guys, that thing is telling you something very serious. The market makers cannot come and form a structure on a weekly time frame just to do nothing. So forget about all this why the market has been ranging. People say, hey, euro ways we change direction. They are just been ranging within the structure. Look at the structure, head and shoulders, left head, right shoulder. And the market came in here by Monday, December 23, and did this rejection and fall. Now, the market is still within the structure. I told you that until this structure is broken and that the market comes aggressively and move and break this structure and break the head and move, until the market does that, we are bearish. Until the market breaks this structure, goes upwards, we are bearish. As long as the market is ranging below, like in between, inside of this structure, we are still bearish. The market has not devalidated the structure that it built. It has just been gathering momentum. All this while it's ranging, it's gathering momentum to pull to the downside. We know Euro USD is going to fall. And when it will fall, guys, the market is going to fall. At least for those of you who are going to make this market with me, because I'm watching this market live and direct to make this market. We are going to sorry. Let me pick the measurements to know how many pips we are going to pick out from this market short position. Okay, so the market is going to fall at least nothing less than 670 pips, guys, close to 700 pips. We are damn sure the market is going to pull that down. 600 pips confirmed. The reason is because look at the time it takes for the market to make ranges. Anytime you see the market make a range, when the market breaks out of that range, expect an equal movement to the breakout direction. What I mean is that if the market look at if you measure the size of the range that the market made, if you measure the size of the range, okay, the market made the range. Market has been ranging from this to this. Okay, when you measure it, when the market breaks out, we know that it's going to break out the same size. So if market breaks out of this range, this is where we're expecting the market to come. So an equivalent move commensurating with the range it made. So if the range was 300 pips, when it breaks out, it's going to move 300 pips in that direction. That is it. And that is why you see this thing here. I'm waiting for this market to break. Now, I told you, Euro USD form gave us a nice head and shoulders pattern, which has still not been devalidated. It has been ranging within that head and shoulder. It has not even broken from the right shoulder. It's only when the market breaks from the right shoulder and keeps going on that is when we start looking at it and see if the market wants to devalidate the structure. But I know he said, this guy, if you understand this is 98% certainty that when the market gives you structure on a weekly time frame, you see my face, I'm talking with conviction because I know what I'm saying out of experience. Market gives you a structure on a weekly time frame and holds that structure for a long period of time, guys. There's 98% possibility that the market is not going to break that. The market is not going to devalidate that structure. The market will move in the direction with that structure. So this is an inverse this is a head and shoulder, which is a bearish signal telling us that the market is going to sell. Now, the market has been ranging for since January. The market has been ranging up to this point within that region, but we know the sell is coming soon. Now, when you go to a daily time frame, the daily time frame also gives us a nice structure as well. And what structure is that? It gives us a head and shoulder structure. Why do we say that? Now, look at this chart very well. This is the head, this is the left shoulder, this is the right shoulder. The last time the market came here, I shorted the market and I banked some pips in profit. Head, shoulder, right shoulder. So the market gives us weekly time frame, head and shoulder, daily time frame, head and shoulder. Guys, they did not just come and make that structure just to make the chart look beautiful. No, guys, they are gathering momentum to pull. Now, if you still look at this, inside this structure, you can see another head and shoulders pattern. Left shoulder, head, right shoulder. And I took this trade. Right now, the trade has closed in profit. I banked over, I think, 100 and something pips. Guys, that is it. Now, I told you, when should you start trading Euro USD? Now, the first time to start trading Euro USD is when the market breaks this neckline of the daily head and social structure. So the market breaks this structure, we know we are coming here. We know we are coming here. The market breaks it. We know we are coming. First target profit here, which is over 154 pips. You take that one, you rest, you wait for the market. This is the overall neckline of the head and shoulder that we're waiting for. This zone here, this zone, because this is the weekly neckline of the head and shoulder structure. This is the weekly. This one is the week. So when the market breaks here, then we know that the market is going to fall from here to this zone. And that is going to give us close to 700 pips target. Sure, we're going to bank. So there is a whole lot of potential opportunity in Euro USD for a sell. For those of you who have been trading buy, where if you're a short-time trader, it's not good to target 50 to 70 pips for buys in between. But I don't trade that. You know me, guys. I go for the big meat. I don't trade those small pips, 50 pips, unless you just want to scalp. Well, there are a whole lot of traders that are day traders, they scalp a lot. Now, guys, I'm going to DSY. And what is DSY? Dollar index. This spec shows you the strength of the dollar, of the currency. Like as we are seeing now, guys, I told you from my previous video that the head and shoulder structure formed on the weekly time frame in the dollar index, that is inverse head and shoulder structure, which signals a bullish sign. The market, all the while it shows that the dollar was weak, the market has not devalidated structure. She is still holding the structure, showing you that the bullish momentum. So this is in line with the Euro USD. If the dollar index is strong, is buying, the Euro USD should be falling. So they are correlating right now. Okay. So now, guys, it seems the momentum wants to start coming in. So we are waiting for the market. Once the market breaks the dollar index, this neckline of the weekly time frame head and shoulder structure, then this is the neckline. Once the market breaks it, we know that the market is going to buy at least, dollar index is going to buy at least 5,000 pips. Sure, bang, because this is the next zone where we are looking at it to come to. This is the next zone. This zone here. Sorry, this zone here is the next zone we are looking at it to come to. This bar. This is the zone we are looking at. So when you calculate from here to here, it's going to give you 5,000 pips. Sure. So we are waiting for the DSY to break the neckline, which is this blue rectangular box here, and then we know that the market is buy. So now, is it okay for you to start trading Euro USD? For me, for you to be more conservative, I would prefer you to wait for the market to break this neckline of the daily time frame head and shoulder, because for all I know, the market might come here and do some retracement and give you some bullish, continue to the upside and give you some bullish rejection. So it is better you wait for the market to break out like this, break out of this zone like this, give you some retracement, and then you short, break out, retest, then you sell. That will be the more conservative entry. For those of you who understand how a breakout works, okay, you can sell. You can even enter before this breakout if you are sure that the market is going to break. Okay, so, but to be more conservative, it is better you allow You allow the neckline of this head and shoulder structure to break, then wait for a pullback, and then you start shorting. That is that for Euro USD and DSY. Now, GBP NZD, I will not be talking about GBP NZD because the market has been crazy. I will just leave this pair because we have something other important stuff to talk about. Now, guys, gold. Let me pull out the other chart because this chart, I've done a lot of markups there. Now, gold. Guys, you know that I've been telling you that we have been banging gold back to back. In fact, somebody called me the gold master, the gold miner. I was smiling. Guys, it's just that when you understand a pair, you can predict for sure how that pair is going to move, what it's going to do the next, and that is how it is. Gold has given us back to back profit. Now, what should we be expecting from gold henceforth? Now, remember my last video, I told you, and it happened exactly as I told you. When this engulfing candle, let me zoom it more. Okay, so when this engulfing candle came in on this all-time highs of gold, this aggressive engulfing candle, engulfing this candle, I told you that gold is going to sell at least 9,000 pips, and it did give us that 9,000 pips sell. Okay, now what are we? It has come to this supply zone, and we are seeing small bullish candle there. So is it going to buy or is it going to sell? Where? From what I'm seeing, come today is Tuesday. Okay, Tuesday, 11th of June. From what I'm seeing, come Thursday, Friday, from Wednesday, Thursday, Friday, this market is going to sell. This green candle you see will end up being a red candle. Guys, I'm saying this for sure because I know what I'm saying. From what I'm seeing. So if you are buying gold, please, for now, you can take your profits and observe the market. If gold actually breaks this demand zone here, guys, we know that gold is still going to fall. Initial prediction was 27,000 pips drop. It has given us the first target, 9,000 pips drop, and it's going to drop if the market breaks this zone. But if it doesn't, then we know that we are going for a new all-time high. Gold is going to break here and give us a new all-time high. But for those who are buying, is it good to be buying now? I think that become Wednesday, Thursday, Friday, before the week ends, this market gold will still sell. So if you are buying gold, be careful, because you know the way I trade, I follow the trend. The general trend of gold is bullish. Yes, we know. General trend of gold is bullish. Okay, but you only enter on a zone, nice zone, supply and demand zones, where you have high possibility that your trade will why the market will respect those zones. Okay, like this, look at these zones where you have those accumulation. Those are the good zones. Now the market did give us this and come back here, and you see this zone, the market is seeing the market is respecting it, but it may and has higher possibility of dropping. Okay, because if you look at the buy, it's not that strong. The daily candle, the sells are more strong, showing that that is where they want to drive. So for those who are buying gold, if you want to buy gold for a short term. Don't enter a swing trade on gold. Just enter a trade maybe that would give you 1,000 pips, 1,500 pips, and just close. Okay, for the buys, because from what I'm seeing, the market might likely sell. The market might likely sell again. Okay. Now, another thing I'm looking at is, you see, since gold is a bullish pair, look at what is going on. Impulsive retracement, the higher highs did not take out the previous highs. Higher high, higher low, higher highs. The highs was equal to the previous high, did not take out the previous. Then it came down, it might go the next high. Is showing that the market is likely reverse. Yes, when you see that move like this, supposed to be impulsive like this, then like this, Then the next move will be bigger than this, then like this. That is a bullish move. When you see this move like, you know that it's bullish. But when the market comes to where I want to reverse, you see something like this. The market is like that finger, like that 5-finger. When you see that 5-finger pattern like this, the higher highs is not coming to take off the previous high, just close to it or equal to it and drop. Then know that this market, the buys has weakened. Okay, even if the buy is going to come in, it might not be now. The market might sell some pips. So you see the moves. This moves like this is not a good sign for buys, guys. It's not a good sign for buys. And looking at what is going on with the Euro USD, it seems the Euro USD is coming back to start trending for the sell. And if the Euro USD will be selling, then gold should be selling too, because it shows that the US economy is strong, the dollar is strong, and if the dollar is strong, the gold is supposed to be selling, not buying. So this is in line with what is actually going on right now with Euro USD. And with what we are seeing, with the structure we are seeing right now, guys, with this thing, this move I'm seeing, like this, guys, the possibility that it's going to sell is higher than it's going to buy. So even if we want to buy, because I only follow the trend, okay, and as long as the market is above my trend line, which is this, the two trend that, okay, above, as far as the market is above my trend, guys, I'm still bullish. But even if you are bullish, you should not start clicking buy anywhere you see. Understand where to click your buys. So at this point, we will wait and watch the market and see what the market does. But I know the market will likely break this point. Will likely sell some bit more before any bullish move will come in, because of what we are seeing right now. Okay, this is on the daily time frame. It looks like a double top. This looks like a double top, and the market reversed, and the market rejected off of it. So guys, for those of you who have been trading gold, be careful. Wait for a clear opportunity before you bang gold. Now look at 4 hours. When we come down to 4 hours on gold, what is 4 hours telling us? What is 4 hours telling us? If you look, impulsive retracement, lower low, lower high, lower low, lower high, lower low. So you see the market is making more lows and the buys are not strong. So we'll just observe the market. The market breaks here, then we know that we are going to bang a lot of, the market is going to force some more. So despite the fact that we are trading, I only follow the trend. I also know how to trade counter trends. Okay, I know how to trade counter trends, but guys, I don't do that often. I like making trades that are sure, that I'm even excited taking. There are trades you will take, your mind will be troubling you. You know that all criteria are not met. You know that trade you're not too sure, but there are trades you take, you just be so excited taking. You'll not be scared. Those are the type of trade I like taking, because the reason is because I feel more relaxed. It has a lot to do with my emotion. I will not be emotional about that trade, because I know that trade has higher possibility of working than the trades that are not sure. So don't trade what you are not sure of. Trade what you are sure of. It's better you are very sure and the market take you out. You know that you did what you're supposed to do, than not to do what you're supposed to do properly and you enter the trend, the market takes you out. It will be so disastrous with your emotion. To temper with emotion a lot. That's trading for you guys. So trade what you are sure of. Okay, so that is that. I decided to update you so that you guys will know where you are in the stream of time, so as to know what you should be trading and what you should avoid. So USD JPY, we know USD JPY is a one directional market. Buy. Despite the fact that we have some sales, some crazy sales, the market will still buy. The reason is because, okay, we are waiting for the market to take out this zone. This is a 4. Okay, let's go to daily time frame. The market is bullish, we know definitely. So we know that USD JPY is coming coming back to this resistance point. So from where it is, if you want to take your trade, go to 4 hours and wait for the market to break this zone. Wait for market to break this zone. Once the market takes out this zone, Once the market takes it, you know, I've taught you how to know when the resistance is going to be. Market come aggressively and breaks. If the market come aggressively and breaks it like this, then you know that it has broken. Wait for a pullback back to that region and a little consolidation. Then it's time to buy. So USD JPY is going to buy. It's going to buy. Like, how many pips are we predicting USD JPY to buy? We are speculating and predicting. Let me remove this bad guy here. Okay, so we are predicting that from where USD JPY is, we are predicting that it's going to buy up to back to the resistance point, which is up to 270 pips. I think 270 pips. Okay, so we know that it's going to buy 200, and that's not a bad trade. That's not, if you can catch it very well, it's 270 pips is sure. 270 pips with mini lot size, that is over $270, which is not a bad one. For those of you guys who are trading profit, 5% profit target, when you take 2 mini lot size on this trade, you have passed your first level verification 5%. That's good. So you don't need to start looking for trade here and there, clicking buttons that are not working. Take one trade that you are sure. Take as multiple entries as you can, and you are done. Don't risk above your 2% if you're trading a profit, which is over from 10K account up. So don't trade above 2%. But one trade can give you the target you will make, even if it's going to take 3-4 days for the trade to hit the target profit. Once you know that the market is sure and you are in profit, just as once you make a reasonable amount of profit, adjust your stop loss to entry to break even, so that you will be completely risk-free on that trade and allow the market to run. If the market hits your target, you have passed your verification 5%, number one, and you wait for another entry, look for another trade. So I told people that if you're trading a profit account, you don't need to be trading every day in order to pass your verification. If you're trading every day, it saps your energy. Trading every day makes you to make wrong decisions. Do your markup very well, analyze. You see how we analyze the market, analyze the chart, tear the chart up, scatter the chart, guys, tear the chart and make your analysis. Take the short trade that you have. One trade alone can give you your 5% profit target. And you look for, when you pass your verification level 1, you wait. You wait for the next entry. You wait for the next trade. You analyze again. You see a very clear entry. You take 2 trades alone can give you your live funded account. Then when you are in the live funded account, you have opportunity to maximize your profits. Now you'll not be chasing over 5%, you should be chasing over 10%, so that when you withdraw, you know that it's a reasonable amount of money you are going home with. So one trade, two trades can do the tricks of passing your verification. So for those of you who are there, day trading kills you as it disturbs you. Okay, now I'm seeing something very sweet on this chart, Euro AUD. Guys, Euro AUD is another pair that I've been trading. I've been telling you guys about this trade. And I told you in my previous trade, in my previous videos, that Euro AUD is still a sell. The reason why we say Euro AUD is still a sell is because of the structure it gave us. Guys, there is how this pair behave. It ranges a lot. It gives you kind of crazy stop hunt. If you look at the chart, candlesticks, see how those pins here and there, all over the places. But that's how this pair behaves. But as far as it's making those careless hunting, it knows where it's going to, and it will definitely move to that direction. That is how Euro AUD behave. And when it's moving, one candle, two candle can be very big. That's how this pair mean. So I told you guys that this market gives us this head and shoulder structure. Look at the structure on a daily time frame. When this market gives you this structure, left shoulder, right shoulder, head. When the market gave us this structure and it was ranging aggressively within that region, I told you guys that the market will sell, as the market is going to say. And look at our moving trend line. As far as the market goes below, the market is a sell. And all this while the market was ranging, it did not take out the structure. Now the market has fallen and even taken out the neckline of this crazy pair. Market has taken out the neckline of this head and shoulder structure. The neckline is gone, and now we are trading below it. So what should you be expecting trading Euro AUD? Euro AUD is a sell, guys. Euro AUD is a sell. Look at that aggressive engulfing bar in that neckline region. So the market will fall. So where are we expecting the market to fall to? Okay, so we are going to come to weekly time frame and see. Always zoom out, zoom out, zoom out. Okay, guys. Now, two things happen. The daily time frame gives us head and shoulder structure. Then the weekly time frame also gives us head and, remember this head and shoulder that we marked a very long time ago. Head and shoulders, head, shoulder, shoulder. You see what the market has been ranging, and inside the range, it still gives us another head and shoulder structure showing that it's sell. So whenever you see the market doing weekly time frame giving a structure, daily time frame aligning with that structure, and the market has not moved, it's ranging, just forget about it. Relax. They will range. And when they start dropping, it will be like a sniper. You will be banging pips over pips. And what? So the market has breaking the neckline of the daily structure. We are waiting for the weekly time frame neckline to be broken, which is around this zone. So when the market breaks, we are expecting the market to fall at least short position. Let me calculate how many pips. We are expecting the market to fall at least 700 pips as well. We know the market is going to give us 700 pips at a, which is a very nice profit target if you're on the funded stage in your profit trading challenge. 700 pips is a big one. Just 2 mini lot size on 700 pips is going to give you $1,400, which is more than 10%, which is close to 14% of your account return of investment. That's massive. That's massive. 2 mini lot size alone, holding this trade for 700 pips, it's going to give you $1,400. That's massive, guys. So, guys, that is what we are looking at now. So, if you don't have money in your trading account, some traders pull out money when the market is behaving, so they will not be tempted to be trading. That's good. It's a nice one. Anyhow, you know how to deal with your emotion is best. But if you don't have money in your trading account, or you've not buy any prop firm, if you need a prop firm, a very reasonable prop firm, because you know prop firms are closing out now. A lot of prop firms have been shut down. But if you need a legit prop firm that you can trade, drop your comment below, chat me up, and I will give you a link to one that is trustworthy, that you can trade. Then if you have good capital, if you have trading money to trade in your account, start funding your account right now. I am telling you that as far as you're in this channel, you're going to make money together. Start funding, because the market is starting to align, to go as predicted, to go as expected. We are looking at the market breaking the ranging zones, and whenever the market breaks the range, it's going to trend aggressively, and it's going to give us equal number of pips that the range accumulated. So that is how this market moves. So guys, I decided to do this video. This video has been a long one. I'm so excited with what I'm seeing in the market, and that is why I say, let me come and do this video for you, so that you will be updated as to the pairs you should be trading. You know, the pairs I've recommended from analysis here. I've recommended Euro USD, GBP, Euro USD, gold, and Euro AUD. Those are the pairs you should be thinking of trading, so that you will not go and start making mistakes. What about JPP USD? Do we have anything reasonable coming in here? Let's see. Okay, let's see. Definitely, we know if Euro USD is selling, JPP USD should follow suit. But then we just have to be very sure of what we are doing, so that we will not start trading something that we are not sure of. So if you take out this, okay, this is a head, this is a left shoulder, this is a right shoulder. Okay, it still gives us a nice head and shoulder structure, and this is the neckline of the daily time frame head and shoulder structure. Okay, which shows the sell signal. Let's see the weekly time frame. Do we have a structure? I cannot find any clear structure on the weekly time frame on this pair, GBP USD, but the market is trading below our trend line and below the daily time frame head and shoulder structure. Look at the trend line. So it still sells. For those of you who want to be trading, I will not be trading GBP USD. The reason is because the shit is not clear to me. Though we have a structure on a daily time frame, but I prefer the one that have weekly time frame structure and the daily time frame aligning with that. It gives me more concise signal than this. Okay, so but if the market breaks out of this daily time frame range, we know that the market is going to drop at least nothing less than market is going to drop nothing less than 290 pips. Okay, for the daily time frame structure, 290 pips, GBP USD is going to drop. We know it will also sell, but it might not be as equal as what Euro USD will sell. Okay, so if you want to trade GBP USD for a sell, wait for the breakout of this head and shoulders neckline of the head and shoulders structure. Then you're going to sell. At least you're going to target 290 pips targets for that. That's for that. So guys, that is all. Let me unshare my screen right now with you guys. So guys, traders, that's all. We've broken down the market. We've scrubbed the market and updated you on what you should be trading, what you should be looking at. Go back to your chart, look at all these pairs that we've analyzed, and see if you can resonate with what you just posted here, what you just mentioned in this video. It's going to be mind-blowing. We are going to bang this market back to back. Gold is actually showing us a reversal structure for a sell side, though it's not a full reversal, but we know that gold is going to sell for a while. Why Euro USD is doing the sells, Euro AUD is also selling, will also be selling. GBP USD might follow suit as well, but if you want to trade, if you want to select pair Euro USD, Euro USD, Euro AUD, these two pairs are sure. We know that they are going to sell, including gold. Okay, including gold. Look out for sales. Look out for sales opportunity in a very finite trade, but I don't like trading against the trend. So that is why I might not be trading. I might not be calling good for you to trade, but on my own, I may trade good. And what I'm going to trade on gold is the intermittent buys. You know, when the market is trending, it's going to make impulsive retracement impossible. So if it's selling after the impulsive move, when you want to start the retracement move, which is the buys, I'm going to look at for those short buys, and I'll be taking them because I have experience. I know how that pair be. I know how it behaves when it wants to buy. So I'll be waiting for those short buy. I'll be taking it, even if it's 2,500 piece, 1,500 piece, just be taking them intermediately and be banking. Why Euro USD, Euro AUD? We know they are going to sell, and they have been showing us signs. The US economy is coming back to boom. We are seeing the dollar is gaining more momentum, more strength. So that is validating what we are expecting the pair to do. The NFP news that came out last week, Friday, it was aggressive. It was so good for the USD, and we saw that the USD, the market sold, the market dipped, Euro USD dipped. So the US economy is reviving, and that is good for Euro USD for itself. And Euro AUD is following. So guys, that is that for that. I just decided to update you. I've got your back. For those of you who are still struggling in this game, don't worry. Just keep coming back to this channel. Share this channel with all those guys just trading, those guys who are struggling in this trade. Share this channel. Keep coming back to this channel. I'll be dropping videos. I'll be updating you with what is going on in the market, so you'll be properly guided. If you want to pass your Profem account, if you have a Profem account you've bought already and you want to pass, contact me and I will help you out. We're going to pass it within a short period of time, because as far as the market is giving trending, I'm not going to assure you that I perform magic. If the market is not moving very well, no trade. No trade, guys. If the market is not moving, no trade. You must not trade every day. As far as the market is trending and giving us that sign that it's going, we are going to pass the challenge ASAP. ASAP. I assure you that. I guarantee you that. All this while the market, the currency pairs have not been trading very well. We are making money, and what have we been trading? We have been trading gold, and you guys know we've been banging gold 5,000, 6,000, 3,000, 2,000. We've been banging gold here and there. We've been making money with trading gold, and we will still keep making money trading gold, because gold is a done deal. We understand how that pair behave. We know when the market will reverse. We know when the market wants to start trending. We're going to make money together. So guys, I decided to update you on this trade and what is going on. So thank you very much for staying true to the video. Expect the next video, and the next video is going to be interesting, especially for those traders in Nigeria. Why most Nigerians don't make money trading forex, the challenges. Expect that video is going to be an eye opener, and how you can deal with those challenges and still come out to be a successful trader. Watch out for that video. So for now, thank you very much. Keep liking and sharing this channel, and I want to sign out right now. See you in my next video. Bye.